With all the big buzzing business news this Friday evening, I'm Vikram Oza with this edition of Business at 9 coming to you live from our studios in Mumbai. Now, SEBI, the markets regulator, has proposed this framework to ease retail participation in algorithmic trade. And according to the draft circular that has been put out, the facility of algo trading is going to be provided by the stockbroker after obtaining the requisite permission of the stock exchange for each algorithm. My colleague Anurag Joshi has been tracking this for us and he joins us. Anurag.
Markets regulator Securities and Exchange Board of India has proposed a framework for retail investors to access algorithmic trading. SEBI has unveiled a draft circular and has invited comments from the public and market participants by January 3rd. According to the SEBI draft circular, retail investors can access the algos via stockbrokers, and this will be under strict regulations. The algos are to be tagged with a unique identifier, and this will be for better audit and monitoring. And stockbrokers must ensure a robust API security and with two-factor authentication. Now, algos have been classified under white box, which is the transparent logic, and the black box, which is the undisclosed logic. The black box, all algo providers are to register as research analysts and are supposed to maintain reports. The implementation standards are to be finalized by the stock exchanges and the broker forums, which are expected to also give their feedback to the draft circular of SEBI.
That's right, Anurag. Now, algorithmic trading long has been the playground of institutions with deep pockets and cutting-edge technology. But with this latest proposal of SEBI, could this change the game for retail investors? Under this framework, like was being explained, brokers are going to need exchange approval for every algorithm that they deploy. And there will be strict tagging and auditing requirements that would have to be complied with. And retail investors who are developing their own algos, they will also need to register them, ensuring greater transparency and accountability. But is this going to open the doors to innovation or create barriers for retail participants? Let's ask markets expert Sunil Subramaniam joining us on Business at 9. Great to have you with us as always, Sunil. What do you make of SEBI's proposal? Is this overdue to ensure a level playing field, or do you think it could stifle innovation?
No, I think it's very encouraging because you see the report on the F&Os and the retail trading that there were huge losses being made by retail. A lot of the time, that's because the time to action. See, institutional investors with algo trading can act instantaneously, and if the computer effectively executes the order, it's a stop loss or a book profit order, and there are certain variables which are continuously processed, right from the US Fed rates to inflation to Europe rate actions to a whole lot of stuff. So to absorb all of that and to have something ready which can go and act in the market, institutions were at a huge advantage with retail investors, and hence retail investors were on the losing end of this. Now, ultimately at the institutional level, it's some individual who's sitting and drafting these, right? They have a desk and there'll be an individual at the desk. Now, why can't that individual put it to use for himself? It will help to book stop losses and curtail it. Second, it will enable action even when they are not present because it's fed into the system and the system executes it. So I think human intelligence will be put to very good use. And I think this is a good option for, there are people who are gamblers who come in and just based on SATA, fin influencers come and do. There are other people who are using logic to do this. Even they were at the losing end here because they couldn't act as fast as the institutional guy on the other side. This will get a greater level playing field. And I think those individuals who are very, as you know, India is the IT industry's birthplace, right? We are the guys who are developing all of this for the world. And if those engineers now are on their own and they would like to do this, it's an excellent way and they will learn in the process. See, there's a white box and a black box, right? So the black box, you don't need to reveal what the way you're doing the computation. And, somebody could come up with a winning strategy, and I think it would be a great, great help.
So when you say retail investors, yes, they have often lagged behind institutions in algo trade because of a lack of resources for the most part. So you're saying this is good for them, but for brokers and for retail algo traders, how significant will be the operational burden for brokers to seek that approval from SEBI for every algorithm and its modifications? Do you think this could deter brokers from actively supporting retail algo traders?
No, it's only the algorithm that needs to be approved. It can be applied 20,000 times in the stock market. It's only that you need to specify how your algo works, right? And get approval for the stock exchange. Any modification, you need to get approval. But the execution of the algo, each execution doesn't need approval. So it doesn't mean anything. It just means that you're specifying the methodology, and there's the black box. There's an execution only, which is a white box. And there's a black box where you can just go and patent it. It's like taking a patent under the intellectual property. You go and patent your method of doing. So you will give a weightage to US inflation. You will give a weightage to Indian inflation. That could be very different from somebody else. You either want it to be in the public domain or you don't. So I think SEBI has given the option for both there. And it's a one-time approval. Only if you modify it will you need again approval. So it can be, I could keep an algo going for a year or 2 years or 3 years, as long as it's controlling my risk. So I think the biggest thing is with the algo is it helps to control the risk, the quantum of the loss that you will suffer, right? It protects you from. Because one big loss could wipe out your gains over multiple, periods.
Yes, but the proposals focus on tagging algos for audit trails and for accountability. It certainly sounds good in principle, Sunil, but do you see any practical challenges in implementing them or monitoring these requirements?
See, the practical challenge will be the black box ones to get it. Because see, what happens, the danger with algo is that it causes a run on certain stocks or run on something, right? Algo, in fact, sometimes causes a lot of trouble because they act too fast before humans can act. So sometimes it leaks, but there are circuit breakers and there are SEBI's own mechanisms to prevent that from happening. But you need to regulate algo, right? You can't have 100,000 algos all doing the same thing, hitting the market at one time, right? You've seen in the currency market, it's caused havoc, right, in many countries. So I think the regulation is important, stipulating. Second is, in the black box, I think SEBI will be far more stricter because in a white box, anybody else can use your algo also, right? Because the broker registers it with the exchange. So in its white box, it's open execution. I can say, I'll sign up for that. Broker can market it to multiple people. Those will be regulated. But the black box ones, because it can't be replicated by others, SEBI will take greater time to approve it. But the risk of somebody replicating and mass orders being executed in the market based on one particular logic will be much, much less.
So you're saying that makes it fair. But you did mention how this works in other countries, Sunil. How exactly does what is being proposed over here compare with global regulations on algorithmic trading? Are we playing catch up over here, or could this become what we have, perhaps become a model for other markets?
See, I think we are being conservative here in insisting that every algo we get approved and registered and all of that. I think internationally it's not. It's an open field. And that's why you had people like George Soros hitting the Malaysian currency or the British pound at various points in time, right? So I think we are going about it the right way. We have not introduced it so far. We've taken our time to understand it. We've seen the impact of institutional algo come on the market here. And then we are allowing the retail. So I think we are taking a measured approach to it. And if after a year or two of its execution, it works well, other countries could replicate it as a methodology of bringing uniformity and consistency to market price movements. So I think the proof of the pudding is in the eating. They'll test it out, see how this works, right? And then gradually liberalize. Our regulators have always been conservative and taking smaller steps at a time before you enter on a mega step.
So Sunil, now that retail investors are required to register their self-developed algorithms, do you see perhaps a rise in innovation, or do you think there will be a decline in the DIY algo trading because of all the added compliance burden that comes with it?
No. Right now they can't do it. So I think it's a great boost for innovation because each one has its own ideas, right?
Yes.
And like I said, India is the crucible of the entire IT industry, right? I think the IT brains that we have, and world over, all IT companies are led by Indians. Let's not forget that. So to that extent, I think this is a great boost. You'll have Bangalore-based techies now going and registering and trying out all their various fundamental thought processes. They are able to now practically do it. I think it's a great boost for innovation.
I sense excitement in how you're looking at this proposal. Of course, we'll have to wait and see what form it takes since it's a proposal, but undoubtedly a bold step. Yes? What do you say?
One more reason for that.
Yes.
The common rule of the market is buy on the rumor, sell on the fact.
You're right.
So what an algo does is it will help you to latch it on and buy, but sell it the moment the regulation comes within microseconds of its happening.
Right.
See, otherwise, everybody believes in this. But by the time the thing comes out as a fact, you're too late in the market. This will help you beat them to it. So I think it's great,
So,
from that perspective.
in that sense, there is a certain amount of democratization that will come in algo trading. But of course, the devil is going to lie in the details. We'll wait for feedback to come in from all the stakeholders. The big question, of course, will these rules truly empower retail investors, or will it complicate their part to leverage technology in trading? It's going to be a model worth watching out for. Sunil, yes, you had a point to make before we close?
Yeah, quickly. One final point here, you can separate retail investors from retail speculators.
Right.
This will help retail investors. Maybe the speculator part of it, right? Who are in for the gamble and for this, we don't know how that's going to be.
We always like to separate the wheat from the chaff, but that has always been a big ask. Now, whether or not this proposal that SEBI has put out is going to be the route for it, we'll have to wait and watch. But thank you, Sunil, for your insights. Always appreciated. We'll be watching this space very closely as SEBI fine-tunes that framework for algo trading. Meanwhile, we are looking at developments at FICCI. Harshvardhan Agarwal has taken over